Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat. This is along with me. I have Vinny Motiwala. Very good afternoon to you, Vinny. And another day, and markets have hit a brand new, or rather fresh record high levels in today's trading session with the Sensex that actually saw an uptick as well, and it actually topped 66,000 for the first time ever. If you look at the markets right now, we are off the day's highest point. Nevertheless, you have Nifty that is trading above that 19,500 mark as well. A lot of earnings reactions today. We have TCS, HCL Tech that are reacting to earnings. Wipro is set to report its earnings, and Federal Bank also is reporting to its earnings, isn't it?
Absolutely. But on that note, let's get started, which are the other stocks that are buzzing in trade, either on the back of news flows or on the back of technicals as well. On the technicals, today we're joined by Kunal Bothra, while from the research team, today we have Lisa as well as Ashesha joining in with us. A very good afternoon to all three of you all. Good afternoon to you as well, Cheryl. And as always, I'll be starting with the first stock that is in focus today. We're going to start with Dreamfolks. Now, Dreamfolks is in focus after they've announced a collaboration to include 340 plus Plaza premium lounges, and this is in over 70 plus major international airports into the Dreamfolks global lounge network, offering an enhanced travel experience to its members worldwide, which will be starting from July 24, 2023. Now, this collaboration will facilitate extensive coverage of Plaza premium lounges across 4 continents, including travel hubs such as Australia, Canada, the United Kingdom, Hong Kong, Florida, Brazil, Italy, Indonesia, Malaysia, Singapore. A lot of other names coming in there.
Going and diversifying, actually expanding
in different geographies. So surely that's the reason, you can see that stock buzzing in trade as well, trading with gains of as much as 5% as of now, Cheryl.
All right, but let me talk about the top gainer on the Nifty at this point in time, actually, Vinny, and that definitely is Hindalco, soaring in trade today. Last time I checked, if you look at Hindalco, the stock price was trading higher by about 3%. The company said that they will sell land in Maharashtra for about 595 crore rupees, and the price is very attractive. This is what one of the analysts at Centrum Institutional had to say. Also, what they're saying is what analysts are actually saying, that this move will help Hindalco focus on their core business and reduce debt. This is what analysts have to say. So on back of this, you have Hindalco that is buzzing, and remember that they sold this particular land parcel to Century Textiles, so that one also will be in focus.
Absolutely, and today obviously this one is the top Nifty gainer, so keeping an eye out on this one. Let's move on to the third stock for today, and that is going to be on the technicals. And Kunal, Brilasoft is a stock that you've picked out for us today. On the charts now, what are the patterns indicating and the charts forming to? Could we expect a sharp run up that has been seen in the last 6 months, that to continue going forward as well?
So, 2022, the stock made a high. In fact, late 21, the stock high, which was around 585 rupees. It fell down or corrected back to 250 mark, and is now just almost at the 360 levels, which means that when you look at this from the 2021 highs, the stock is down more than 225 points from that kind of level. And from the recent low, 2022 low, the stock is up some 100 points. Which means that there's a lot of traction which could be gained for the stock over the medium to long term. So it's gone through a classical phase of a major rally, then a mild correction for the stock, and now it's coming back into its groove. So I believe Brilasoft would be a very interesting bet. The chart patterns on the daily as well as on the weekly charts are very attractive for the stock, indicative of a swing breakout for Brilasoft. So would expect the stock to continue to move up higher. The short-term targets could be kept at closer to 380 to 400 range. But I believe for a time frame of 18 months to 24 months, the stock looks attractive for a target potential of the previous highs of 585.
Okay, surely keeping an eye out on Brilasoft and those levels over there. But let's move on and talk about Patanjali. Ashesha, Patanjali is locked in lower circuit today. Obviously, we have that OFS that has opened up, but give us more details on that one.
Well, yes, on account of OFS, the stock, as you mentioned, is locked in lower circuit. Promoters are intending to sell about 7% stake in the company, and in the event of oversubscription, they can also sell additional 2% stake in the company, totaling to about 9%. They've set floor price at 1,000 rupees per share, indicating a discount of about 18% to yesterday's closing price. Promoters hold about 80.82% stake in the company, and they had to increase the public shareholding from 19.2% to 25% post FPO, because of which the promoters are now selling their shares in the open market. Remember earlier when we spoke to the management, they had said that they expect to comply to the minimum shareholding requirements in the first half of FY24, and they are actively working to dilute that 6% in order to comply with these SEBI guidelines. So on account of this OFS that has factored in, the stock is locked in lower circuit in trade today. Remember, this will be open for non-retail shareholders today, and it will open for retail shareholders tomorrow.
All right, so that is Patanjali, and the reason why that one is in focus in today's trading session. But Lisa, over to you. Ashiana Housing is the other counter that you're tracking. What's the news for surrounding this particular stock?
The stock is buzzing today as the board has approved a buyback, and the buyback price is set at 301 per share, which is a 40% premium to the current market price and a 51% premium to yesterday's close. And if we look at the details of the buyback, it's for buying back of 18 lakh shares not aggregating more than 55 crore, and the buyback is proposed to be made from the existing shareholders, and even the promoters are entitled to buyback. Promoters are holding 61% stake in the company. Looking at the record date, that has been fixed on 20th of July, and besides rewarding the shareholders, the buyback has the potential to increase the return ratios. Now, if we look at the stock price movement, the stock has been gaining in the last 3 days, but today it has gained 15% in early morning trade, and this is the highest jump in over a year. And that is why we can see Ashiana Housing, it's trending, and it has cooled off from its early morning gains, but it's still up around 8% as we speak.
Let's move on and talk about another stock that has been a gainer over the last 1 year as well, almost 140% returns from 80 rupees to 204. That's RBL Bank. And Kunal, today trading at a 52-week high. What is the target that you're keeping an eye out on RBL Bank? Should one book profits or maybe expect a sharper run-up going forward also?
No, I think the run-up has just started for RBL Bank. In fact, the stock has broken past about the psychological level of 200, I think today or yesterday. Importantly, it's a swing breakout for RBL Bank on the weekly as well as on the monthly charts. So when you try and look at the recent patterns for RBL Bank, the stock was almost at, I think, 135, 140 just about 3 or 4 months back, and it's now recovered to 200 plus levels, which means a recovery of almost 50% for RBL Bank in the time span of the last 3 odd months. So it looks like a very attractive chart. Even from current levels, I would believe that traders who've been holding on to long positions should continue to do that. The swing targets for RBL Bank would probably be closer to 240 to 50 mark for the near term.
Okay, keeping an eye out on those levels for RBL Bank. But let's move on and talk about a pharma name. We have Lupin that is in focus again today. The share price of Lupin has actually seen a fall coming in, like you can see on your screen. It's down almost 1% in trade as of now. And this is mainly as the company has received an observation in its Nagpur facility. Now, Lupin on 12th of July had informed that the US FDA had inspected the Nagpur oral solid dose facility from 3rd of July to 11th of July. Now, there are 2 observations that have been received in this Form 483. And yes, the company said that they're confident that they'll be addressing those observations. Obviously, they will be working with the US FDA to resolve them at the earliest. But obviously, these 2 observations is what everyone's keeping an eye out on. And as of now, Lupin is trading with cuts of 1% in trade share.
All right, that is for you. That is actually the stock for you. But let's move on and let's talk about Federal Bank, because that particular counter came out with its earnings earlier in the day. And we are joined by Mr. Shyam Srinivasan, who's the MD and CEO at Federal Bank. A very good afternoon to you, Mr. Srinivasan. Thank you so much for joining us on ET Now. And let's firstly ask you about your margins number. If you could tell us and explain to us what was the margins for your bank in the quarter gone by, and also how should one see it directionally going ahead into Q2?
Okay, let me begin by saying that the quarter that went by, Q1 is seasonally a slow quarter. We've had an exceptionally good, strong beginning, the most strongest in a long period of time I've seen. Sequential growth, you would have noticed on credit and deposits has been almost near 5%, both businesses sequentially growing. That sets the base for a strong FY24. NII grew 20%. And NIMs were at 3.15 for the quarter. We had said that FY24 will be sort of in a year of two halves, with the first half seeing some compression in margins, and we did see that come through. But what is most heartening and encouraging is that the outlook for NIM, for at least for us, looks like Q2 onwards we will start seeing the expansion back, because the pricing on the deposits is now almost at the tail end, and therefore we believe the NIM expansion should start back in Q2.
Right, Mr. Srinivasan, this is Vinny joining in the conversation as well, and a good afternoon to you. So, I also want to understand what changes for you in Q2, what gives you the confidence that the NIMs will actually recover in Q2 now?
Well, it's not pressure in Q1, it's just a tail effect or the lagged effect of the pricing differential, the rate passing difference between the credit book getting the pricing upfront and the deposits lagging it. We had said in Q4 as well that we will have 1 quarter more, as in from then, of the impact of the transfer of price, and we believe that has played through in Q1 of FY24. So now from here on, the yield on advances expansion will be higher than the cost of deposits. So the spread opens up again, and we believe, we ended at 315. We expect 7 to 8 basis point improvement in NIM as we go into FY24, second quarter of FY24.
Right. If you could talk to us about how the cost of fund is shaping up for Federal Bank, and also if adding to that, if you could tell us about the competition that you are actually witnessing in the deposit front, what's the trend looking like right now for you?
The last 2-3 weeks, if it's any index of how the pricing is shaping up, I think there's order now. I don't think the price war as it was is escalating. In fact, there are some buckets, some banks have started even cutting prices. So I do believe the peak of the price and rate increase is probably moderating. This is all subject to the fact that there are no, at least near-term increases in repo and stuff like that. That is a call that I'm not factoring in our conversation. But all things being equal, we believe that the rate increase in deposits has started moderating or coming off. As a result of it, the funds should stabilize, and as a consequence of it, the yield expansion on credit will play through into spreads and therefore play through into NIMs.
If you could also just tell us what are your slippages numbers, and what last time there was some bit of a pressure coming in on your agri book. So how are the slippages moving this time now?
Well, I think we've been saying both on slippage and credit cost, it will be amongst the top quartile of banks. Our credit cost for the quarter was about 40 basis points, which is what we had guided for. And our slippages continue to be roughly about 1% of our asset book is what the slippages have been analyzed. And that's how it is. This quarter, the overall slippage was about 490 crores, a little over 490 crores. So it's quite consistent with our overall, slippage trajectory. If I recall right, last quarter was about 454 crores. And on an average, roughly in the quarters preceding that, anything between 400 to 450 crores. So I think as FY24 plays through, we will see as the book has grown 20%, and there will always be a year lag on incremental book slippages. So we believe something in the 450 to 500 or in that zone should be our slippages for FY24.
Right. Right, sir. So you have a QIP in the pipeline. If you talk to us about the size, the timing, also the interest that you're witnessing from investors on that?
On none of that I have any specific comment to offer, except that I'm consistently saying that we are now positioned for a capital raise in FY24. Yes, we are keen to get it done as early as possible. We are working through the details. I think our performance is very much along the lines we've been talking about, and therefore our potential investors should take comfort that the guidance we've offered is being seen in action. So hopefully in the in the weeks or months ahead we should have a activity. But I am at no point able to commit to anything. But yeah, we are working through.
All right, sir. Thank you so much for joining us on the show, giving us a take on the numbers, the way ahead that you're envisaging for Federal Bank. Thank you so much for explaining and decoding the numbers for our viewers as well. As you can see on your screen, Federal Bank, after the initial dip, it has seen a mild bit of recovery. At least now the stock is down 3%. But let's put focus on another earnings candidate, and one has to not, how can one not talk about TCS in today's trading session? No doubt, TCS is continuing to face demand uncertainties reflected by increasing cautiousness among customers and a subdued book-to-bill ratio and muted headcount additions. This is what actually Jefferies had mentioned in their note today. No doubt, a lot of brokerages have maintained their stance on that particular company. Jefferies is maintaining a whole stance on the company, but nevertheless, if you can see all the stock price, it has actually recovered from the day's lowest point. It is trading higher by about 3% because the company did highlight that the demand environment is pretty much strong. They're very happy with the order booking and they're expecting that to sustain going ahead. So that's one of the reasons why TCS is holding up pretty much in trade. And a lot of analysts that we spoke to also, Vinny, have mentioned the fact that looks like everything is in the price. All the bad news seems to be priced in for these IT companies, and therefore, as you can see it on your screen, TCS is bucking the trend. It is trading higher by about 3% as we speak.
Absolutely, trading higher by about 3% as we speak. And Jefferies too actually has raised their target price by 10 rupees, but 3,450 rupees is the new target price for TCS. But on that note, let's listen into what the management had to say. We caught up with Kirti Vasan, who is the CEO at TCS, and also listened to what they had to say.
Remaining stable as this was in Q4. Like Q4 also we called out there is some certain uncertainty because of macro change situation. It continues to be around that, and but overall you saw that our TCV continues to be very strong. Our order book is very strong. So our long-term prognosis is good. Short-term we need to see, like clients manage their budget based on the uncertainty, and we will work on that.
This is a situation where, we look at 5 out of the $10 billion, we've done $5 billion from North America and $3.2 billion in BFSI alone. Okay. So the demand environment as such is looking good. I'm not seeing any problems with that. The kind of deals that we are signing up, they're all, long-term committed deals, right? But how we execute them, how do we ramp up and what is the pace at which we want to ramp up is something that we are working with customers, right? Clients really look at some of those 3 or 4 situations today, right? Now, the generative AI hype, which is happening, is the architecture in which we have agreed to execute. Is it fit for purpose? Will it accommodate the generative AI kind of technologies as we progress so that the architecture is really future-proof, right?
All right, so that is the word coming in from the management of TCS as well. As like I said, they are they're seeing a strong demand environment and very happy with the order booking. But Kunal, Piramal Enterprises, are you happy with the way how the stock has moved? I remember that you had also given this as one of your stock pick. 6 months, the stock price is traded higher by about 18%.
Well, yes, it is, and I think it's been a phenomenal uptrend for Piramal Enterprises. The reason for flagging of the stock today is it's now on the verge of completing as well as breaking past above a bullish pennant formation. Now, it's technically a strong formation, indicates that the built-up for the stock price, what it has shown over the last 1 month, could probably get a leg up where the stock could head towards the second round of a breakout for itself. Now, the targets for this pennant formation is almost 80 to 100 rupees further from current levels. So which means we can expect a modest target of 1,050 to 1,100 for Piramal Enterprise. Traders who have a time frame of say 1 month approximately or slightly more than that would look at buying the stock for a potential target in that range.
Okay, let's move on. And Kunal, coming back to you, you have SBI Life on your list as well today. What are the charts indicating now for SBI Life? What should we be expecting? 6 months, nothing much in terms of a return because only 1% return is what it's showing. But now on, what should we expect?
Yeah, I think when you look at it relatively over the last 6 months, stock has not done much, but over the last 3 months, it's recovered quite a bit. I remember, I think the stock was almost at 1,080, 1,100 at the end of the month of March. and from there it's come back towards the 1300 mark, which is the high the stock had made in 2022 second half. So now I believe that at current levels, the stock has come back towards a major resistance point of 1330 approximately. So I think now traders could look at booking profits on SBI Life, and only once the stock crosses about this 1330 mark is where traders could look at a fresh buy on the stock.
All right, so that is the take coming in on SBI Life. Pretty much upbeat on this particular counter, despite the run-up that I've seen in the last 3 months. But Shesha, coming to you, Deep Industries. Why is this one in the spotlight in today's trading session?
But yes, order win is why the stock is in focus. In fact, the stock is gaining nearly 5.5%. The company yesterday said that they've won an order from ONGC for drilling rigs. The total contract value stands about 130 odd crores, and it is to be executed within a period of 3 years from the date of signing the contract. Now, this is a 1300 crore market cap company, not a company that we usually talk about, and it generates revenues of about 330 crores, and hence 130 crore order win becomes important for the company. So on account of this order that the company has won, the stock is gaining in trade today, 5.3% higher in trade as we speak.
5.3% higher in trade is what the stock is doing. But let's move on and talk about Ashok Leyland. And Kunal, how are the charts indicating, and what are they indicating for Ashok Leyland? 16% return in the last 6 months. Since April, we have seen a sharper run-up coming in. So how is it that is panning out in terms of the charts? What is the indication now?
Yeah, I remember, I think almost a month back, the stock was at 150-60 levels. There was some sort of a news flow which had come out for Ashok Leyland. The stock had jumped up to 170-72 mark. From there, I think that was in the first week of the month of June. Towards right now, the stock has been absolutely flat. So it's still trading at 170 odd levels. But then consistent attempt towards a certain resistance point actually leads into a breakout. Now, this is the third major attempt for Ashok Leyland towards the break of this 170-72 range. I believe if the stock happens to close above this 172 mark and gives a convincing or sustains above those levels, this could actually be a big breakout for Ashok Leyland. And remember that it's a low beta stock. So, as compared to most of the other high beta peers, this stock has underperformed. So it could play a very strong catch up from a short to medium term play. 172 and a closing above those levels is very critical for the short term prospects on the upside for Ashok Leyland.
All right, so that's the take coming in on Ashok Leyland. But Lisa, coming to you, you've also got an earnings candidate, Anand Rathi. How are the earnings for this one?
Strong results, Cheryl, and it's reflecting in the sharp up move in the stock also. The stock has risen 15% in early morning session, and it went up 15%, touching a new lifetime high of around 1092 level. It crossed the 1000 level for the first time, and this is because of very strong results. If I look at the results, the net profit, the revenue, that was up 33% on year-on-year basis. Even the assets under management, it was up sequential as well as on yearly basis. On year-on-year basis, it was up 32%, and on sequential basis, it was up 11%, and it stood at 43,400 crore. The ROE that stood at around 43.2%. We also had the management on our channel today, and the management said that the growth has exceeded expectation. They have always been conservative about the growth guidance, and the marginal push in the AUM, that has been because of the market move. The net mobilization, that has been healthy. The debt mutual funds, that has taken a dent due to tax inefficiencies for talking about their segments, the private wealth, that is going to be a key growth engine for the years to come, and the digital wealth, that is expected to support growth. It is a small percentage of their revenue, but going forward in the next 10 years, it's going to grow very fast, and the company also is expecting to reach 2 to 3% of the equity market. So that's an Anand Rathi, and it's in focus on the back of very strong results.
Okay, that's Anand Rathi for y'all. Keep an eye out on that one, trading with gains of almost 7 to 8%. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.